Hey guys, Bill Soriano here from Pittsburgh. It's Sunday, February 15th, one day after Valentine's Day, about 11:43 a.m. Eastern Time. I'm in Pittsburgh, PA. If you like my videos, please make sure you hit the subscribe button, hit the like button, comment below. Tell me what you like, tell me what you don't like. If you have questions, put them there, and as long as they're relevant, I'll answer them for you. So the purpose of today's video is this is every weekend now I'm going to do a weekly market recap showing a few of the trades that I took from and some that I was not able to take using trading now using supply and demand trading, right? Supply and demand zones basically for continuation and reversal trading on the 4 hour time frame, right? That's where we're identifying not only the market structure, but we're identifying the supply and demand zones. Okay. So supply and demand zones are basically just order blocks. They're you know, uh, for sell orders, there are supply zones. For buy orders, there are demand zones. So technically, they're just order blocks where we're waiting for price to come back to, right? We're identifying them on the 4 hour time frame. We want to take the trades with the current market structure bias, right? So it can be a continuation trade. It can also be a reversal trade. I'll show you that here in a second. The trades will be taken on the 15-minute time frame. So once price hits that 4 hour supply or demand zone, we're not going to just trade. We're not going to just set our limit orders there, although there could be some instances where we do. That would be if we're trading from a clear extreme supply or demand zone, and we think the price really has no reason to go further above it or further below it. We may set a limit order there, but those trades are always going to have a lower risk to reward ratio because the invalidation zone is going to be larger, and price is going to have to move a lot further to get to our profit targets, right? Our targets. So trades will be taken on the 15-minute. Normally we'll find uh, a refined supply or demand zone on the 15-minute after we get that change of character or lower time frame flip that we're looking for. I'll tell you all about this. Invalidation zones will be at the top of that zone, and the target will be the next higher low. Must have at least a 1 to 2.5 risk to reward ratio to take the trade. Okay, so when I say that we're going to look for, we're going to do continuation and reversal trades, right? So continuation trades are when price is making higher highs, higher lows, higher highs, higher lows, right? You can see how price is moving up here. You're getting a break of structure. You're making higher highs, higher lows, higher highs, higher lows. Uh, you would look to take trades. Of course, we're not going to take trades as structure is broken, right? We want to take trades once price pulls back to these valid demand zones for this bullish continuation, or these valid supply zones for bearish continuation. Okay, but the continuation trades will be all the way up here. Now, when you get to the top here, and then right here, price comes down, right? Fails to make so you got a higher high, you got a higher low. Price then fails to make a higher high, and it moves down, breaks this structure, which we call a change of character or a choke, and it makes a now lower low. Okay, so at this point, now the bias on the market is bearish. However, since you were in a bullish uptrend here, a strong bullish uptrend, before I would want to take a reversal trade, okay, I would probably wait for another pullback, and I would probably wait for this break of structure here. Then I can identify a valid supply zone up here where I could take the trade, and then we would have continuation trades to the downside. Now, there may be some situations here where you get the change of character, and we could identify a trade, a supply zone up here that we could take a sell order from. Okay, just know that there is a chance that this was just a fake out, and instead of now going to the bearish side, price may continue moving upward. Okay, and I kind of show you that here in this example right here, right? How we have this bullish continuation, price comes down, breaks that structure, right? You're making higher highs, higher lows, higher highs, higher lows, higher high, and then you make that lower low that breaks that structure, causing that change of character right there. Okay. see. And so when that happens there, you could then start looking to find a trade here from this demand zone up here. But then what might happen is price may then just move back to the upside, faking you out, and the bullish continuation may continue. So a lot of times here, as you're in this bullish continuation, you're going to look for those bullish trades. Once you get this change of character, if we had a strong bullish trend like we have here, we may wait for that pullback and that break of structure to the downside before looking to take any sell trades, right? So we may just not trade from this area here, okay? Now, on the other hand here, if price is making higher highs, higher lows, higher highs, higher lows, higher highs, and it breaks that structure to that downside, causing that change of character, but then it goes right back to the upside, which is actually another change of character now. Then, since the original price action was bullish, it would be safe for us to look for a demand zone down here to possibly trade from and continue this bullish continuation. You'll get more of that when we're on the charts here, but I just want to kind of show you that this is the basis of the trading plan, is that we're using these supply and demand zones for continuation reversal trading on the 4-hour time frame, right? But the trades will be taking on 15-minute. So to show you what that looks like here, here's a 4-hour demand zone, maybe down in this area here, right? Price has been making, assuming price has been making these higher highs here and higher lows. We have a bullish bias, right, on the 4-hour time frame. And so we try to find a 4-hour demand zone in this area here. And we'll give you the rules for that in a second. Now, if price has a bearish bias, then we look for a 4-hour supply zone to trade from, okay? Now, once these areas are hit, right, you set your alerts right on the beginning of those areas, and once they're hit, then you would drop down to the 15-minute time frame looking for that lower time frame flip, change of character, right? And so what happens here is you could price is coming up on the 15-minute now, right? Okay, price is coming up. It's making those higher highs, higher lows, higher highs, higher lows. It goes into our 4-hour supply zone, comes down. Now, at this point here, we're looking for a change of character right here because this is the lower low. Prior to this high being made, this is the low. So when price moves down to here, right, and then pulls back and then goes lower, this area right here is not the change of character. This area is. Okay, and when that happens, you're now looking to find a refined supply zone on the 15-minute time frame right here. And what this will do is this will give you a better risk to reward ratio on your trade, right? And that's what we're looking for, okay? So that's kind of how you look at that. Now, in the event, let's say the price comes up into the zone, it pulls back. So initially, right, we were looking at this being the change of character down here at this point. The price pulls back and then goes higher. So since it makes a new high, you now have a new swing low where you want to put your line for your break of structure or change of character, and then you look to trade from this refined 15-minute supply zone here. And it would be just the opposite, obviously, for buy trades. You would be trading from demand zones, okay? So that's kind of what it looks like. Now, here's kind of the trading plan is to, like I said, trade with the 4-hour market bias, identify 4-hour valid 4-hour supply or demand zones. When price hits those zones, drop to the 15-minute, wait for lower time frame flip, change of character, then identify refined zone on the 15-minute, and that's where you'll set your limit orders at, right? Now, the rules for these supply and demand zones are you must have a break of structure. You must have caused by an impulse candle. Now, the impulse candle has to lead to a break of structure. It must have imbalance, right? Which we'll be showing you. The area must not be touched after you get the impulse candle. You can't have a wick or something coming back touching that area. So that's mitigation. So it's not mitigated. And then the fourth thing is there, is the liquidity grab. Prior to the impulse candle, you need a liquidity grab. You need to see some kind of liquidity grab. So that's usually just a wick or something going a little bit lower before the impulse up, or going a little bit higher before the impulse down. Okay. And then, of course, remember, obviously, that these zones, right, these supply and demand zones are basically areas where there's been a little consolidation prior to that impulse candle and that break of structure happening, right? So that's kind of what the trading plan is going to be. Okay, so you know, it's important that before you watch my weekly market recap, that you watch this video here, or else you'll have no idea what I'm talking about on the weekly market recap. Okay, so it's important to watch this video. I'm going to try to find a way to play it at the beginning of each video that I make, each weekly market recap. But if I can't do that, I'll just reference that there's a link down in the description area that you need to go to. The other thing is, if you want to learn more about our trading community, the company we're with, our company has, live educators do live training 5 days a week, on different ways to trade. This is more of a smart money strategy, right? Using supply and demand zones or order blocks on the 4-hour time frame. There are educators in our company that do live training on this. We also have a community of over 6,000 people. We have our own trading strategy in that community using our company's impulse scanner. And so if you want to see what our community is about and you want to learn how to trade, then just visit our secret podcast. There's 10 short videos there at SorianoBlueprint.com/secret. Okay. So now what I'm going to do is I'm going to move on to the weekly market recap. Okay, guys, Bill Soriano here, and this is the hopefully you just got done watching my intro video on the supply and demand zone trading, right? I kind of have that, trying to find a way to merge these together here and put it up on YouTube. So hopefully you just watched that. Now this is the weekly market recap for the week of February 10th through the 14th, 2025. So the purpose of this recap, guys, is just to go over about 4, 5, or 6 pairs, like a maximum of 6 pairs. I think I have 6 pairs to show you today. And obviously, I want to focus on trades that I took using this strategy this week on my demo account, right? Show you that. And so I'm going to just show you that demo account real fast here. And again, I'm not qualified to give any investment advice. I'm just showing you what I learned from the instructors and the live educators in the company that I'm with by getting on their live sessions. This is supply and demand zone trading. It's smart money trading. And so I'm just passing that knowledge on to you. Okay. So you could see here my trades down here that I took. And the winning trade I'm going to show you first was in USDJPY. Again, this is a demo account. That's why these numbers are so high. This is a $100,000 demo account that I'm using for this strategy to test it out. And so this week I took 4 trades, and actually 3 of those 4 trades were losses here. You can see the losses. And then with this one win, right, I was able to show a net profit of $676.93. Okay. So I only won 1 out of 4 trades this week, but I was profitable. And that's because this supply and demand zone trading from the 4-hour time frames, right? The 4-hour demand zones, the 4-hour supply zones, right? This strategy gives you a very, very high risk, risk to reward ratio. And so, you're able to, you could actually lose 75% of your trades like I just did this week here and still end up profitable. So this AUDCHF trade, I'm not even going to show you that because that was a total bonehead move by me. I got in at the wrong place. I read the chart wrong really on it. I read the market structure wrong. It wasn't a good trade to take. And then I decided to double down, which you should never do, obviously. And I took a second trade there and lost that one as well. So I'm not even going to show you that one because that's embarrassing. But just suffice it to say that winning just 25% of my trades, when your losses are only 1% and your wins are at least 2.5%, 3%, this one was actually a 3% one, this USDJPY, and I could have gotten a lot more, as I'll show you. And that's the case, then this was actually about 3.5%, the USDJPY. So you could lose, 3 out of 4 trades and still make money. Okay, so let's look at the USDJPY. So again, on the 4-hour time frame, we're looking here, and the bias is obviously bearish. Now, we don't really use indicators for this strategy, but I have the Lux Algo Smart Money Concepts on here, and I have that set to just show me some swing highs, swing lows, breaks of structure, change of character, all swing, not internal. So all the swing points. Okay. And so it'll show you changes of character. It'll show you breaks of structure. It'll show you highs, lows, significant highs, significant lows, equal highs, and things like that. And then I have it on here twice. So if I wanted to see the order blocks that it was giving me, I could turn that on. But I really like to find the order blocks for the supply and demand zones myself. And I just kind of leave this structure on here just in case I miss something. But a lot of times you'll have a break of structure or change of character and it won't show it for some reason. It all matters what setting you use on the swing points. Okay. And I have it set to 25 here. And then of course I have this imbalance detector here just so I can show you, just so you can see and train yourself on imbalances. The thing about this detector though, it'll show you imbalances, but it won't remove them once the imbalances are filled. So that way you're able to still see them even after the fact, which is good. And it'll show the bullish ones in one color and the bearish ones in another color. So that's actually, I initially thought that was bad because it wasn't removing it when the imbalance was filled. But then I'm thinking to myself, well, in order to teach people how to see the imbalance, that's actually good. It's like that. So I just have those two free indicators on there, and that's the only purpose for them. They're not there to tell you to take trades or anything like that. So the idea here is now this is bearish, and I'm trying to find a supply zone to trade from, right? So the first one I see, again, we're looking for an impulsive candle that leads to a break of structure. You can see that this big candle here leads to a break of structure right here, right? There's imbalance. The imbalance, to find the imbalance, again, if we turn the detector on, you'll see this imbalance right here. Now that imbalance does get filled as it comes back up. That's the idea. We always think that price will move to fill that imbalance. That's why one of the rules, as I went over in just prior to this, is one of the rules for finding these supply and demand zones is that you have a impulse candle leading to a break of structure with imbalance. It leaves imbalance. Okay, so this is a nice imbalance here, and then you could use this candle here right before the impulse candle to identify your supply zone. Now, the only thing is when I go to use that candle, that's a pretty small candle, right? And so I just kind of, I used the wick high here on the impulse candle as my high. So this zone would actually start right here, and it would actually end right about there. And you can see here that on the 4-hour time frame, price went through this zone. These wicks went up, but you could see the rejection. That's a good thing to see. You see that rejection, okay? Now, this is why, obviously, we wouldn't want to set a sell limit order on this 4-hour supply zone because more than likely we would have gotten stopped out, right? And We don't want to do that because we know there's another supply zone right up here above it, and there's all this imbalance here. See all this imbalance here, pink, right? There's all that imbalance that needs to be filled. So we know there's definitely a chance the price is going to come up into that area. So this is a decisional area. It's not an extreme area. And this would be a decisional area as well. So that's why we have to wait for our confirmation. And our confirmation occurs on the lower time frame. We drop down to the 15-minute for that. Okay. And so just so I can show you, because sometimes I forget, this is the 4-hour candle that goes into the zone, right? So if we drop down to the 15-minute here, we could see here's price moving into our zone. And this is our 4-hour zone right here, guys. This is our 4-hour zone. Now, we want to read the market structure here. Okay, so here's a high, here's a low here, there's another high, there's another low here, there's another high. So we could see the bullish market structure coming into the zone, right? And we're looking for that change of character. So right here, you have the swing low, and it gets broken right here. So that's where you get that change of character right to the downside. And that's what you're looking for. You don't want to buy as price is moving up because it may just keep going into that next zone. That's why we drop down to the 15-minute. Okay. Now, right here, what you see is you see that price breaks this structure right here. And it leaves this imbalance, right? So this is actually a supply zone right here. If you look at this indecision candle right here, this blue candle, this would be a nice supply zone here. But we also have all this imbalance here, and we have another supply zone up here. Okay. So, we can get in here if we want to, but the issue is that we would have to use this area for an invalidation zone, right? Or else if price just pops up above here to fill this imbalance like it did, we would lose the trade. Okay. So when I drop down to the 15-minute chart, guys, I like to find the refined 15-minute zone. And for me, the refined zone is right here. Okay. Now this is actually the candle. Let me just get rid of this for a second. This is actually the candle right here. So technically that would be your refined zone. Okay. Now, what I like to do on the 15-minute time frame, though, is when I'm drawing these refined 15-minute time zones, these supply and demand zones, I like to include the imbalance, okay, for a couple reasons here. Well, first of all, you could see here, this is the wick where we get into the trade. This is the candle that gets us into the trade here. It may have been this one. There's definitely this one for sure. So this is where we were able to take the trade on this black line here. So it was probably that candle. But the idea is if we put our limit order up here, it never gets hit. Okay, so what I've learned over the years is that sometimes you have to, when your refined zone is really small, I mean, you want it to be small, it's a refined zone. But sometimes I just like to use the start of the imbalance. So I'll pull this down to about here, right? And so the other thing is this. The other thing is there's another impulsive candle right here that leaves imbalance. So technically you could say, some people would say, and this is where it gets a little subjective, some people would say, hey, maybe that's the zone right there. And that would probably be a better zone to draw. Yeah. Now for me, I would have to include this wick, and so it just makes our zone a little bit bigger. Okay. But you could see here that price just makes an enormous move down during after it hits that zone. So that was the USD JPY trade. Now, there's another trade I missed here, EURNZD. Oh, by the way, just going back to that, let me go back to that USD JPY real fast because people say, well, after the trade, what do you do then? So again, you go back to your 4 hour time frame, and so you could see here, price made this huge move down from this supply zone, right? Now, if we would have just put our limit order in right there, we would have got stopped out of the loss, right? We didn't do that because we had another zone above it. So we knew this may happen. We dropped down to 15-minute wait for confirmation. And that's how we got in. Now, what you would need to do from here is this. You already took the trade, so you're not going to get back in the trade. You're already out. You need price to break structure to the downside here. So what we're looking for this week is for price to take out this low, right? And if price takes out that low, then we'll have another supplier demand zone here that we could possibly trade from, either that one or this one all the way back up here again, right? Because this would be our new leg down, right? So that's one thing that can happen, right? So that'll give us a new opportunity to take a trade. The other thing that can happen is price can decide not to take out this low, right? And it can instead, it might move down a little bit further. That's the wrong thing. It might decide to move down a little bit further and then maybe just work its way up to that supply zone before dropping down again. So those are the two ways that you can look to trade USD JPY this coming week. Okay, let's go to EURNZD. This one I missed. It was a little tricky one here. And again, this is the 4 hour zone right here. Price, the bias was down because of this move down here, right? And so we identified a couple zones here. We had this zone here. We had a little bit of imbalance in there. And you can see what happened is price goes right through that zone, okay? Mainly because what do you have up here? You have another zone all the way up here, okay? And you have imbalance in there, right? Now this zone was already hit, so that's not a valid supply zone for us, but we still have it marked up, okay? So that's why we were okay with price moving a little bit up through here because the next candle came right down and almost got back in the zone, and then it moves back down. Now, if you have like 3 or 4 candles close outside the zone, then it's a little bit iffy. But right now, you just have these 2 candles that close outside the zone, and then price goes right back in. And again, the next zone up was already hit, so that wasn't a valid supply zone there. Okay, so that's why we were looking at this and saying, hey, we may have an opportunity to get a trade here, right? So this is the candle that goes into the zone. Again, we go into the zone here, our market structure. This is our low right here, right? But price goes higher. When price goes higher, this now becomes our low right here. And then the indicator here is actually telling us, hey, there's a change of character right there, right? And this is the candle that kind of causes that. Now, the tricky thing here is that you see this really, there's a little bit of a pullback here. And then this is the impulsive move that causes that break of structure there. Now, your extreme zone here on the 15-minute is all the way up here. Okay, right? You have imbalance up here. You have another area right here that was kind of already hit with this candle. So now you're looking, you have to say to yourself, well, is price going to stop here? If I identify this right here as a supply zone, is it going to stop there or is it going to keep going? Okay. Well, it doesn't have any reason to come up to this zone here because this imbalance has already been filled with this wick. Okay. But it could still come up to here. Okay. So this is where you have to kind of look at it. And you have to say to yourself, okay, that's a good place to get in, but where are we going to put our stop loss? Okay. Um, what makes sense? Where would it make sense to put our stop loss? And so in this case here, instead of putting it, right above that refined area there, I would probably go up a little bit higher here because you do have some imbalance in here. So I would expect the price could come up and fill some of this imbalance. Let me show you if I turn the indicator on. You see this imbalance here, those pink shaded areas. So I would expect the price could come up to there, but but if it went any further, then I would really think, it's probably going to keep moving higher at this point. So again, off of that area right there, you see price comes back. You have a wick here that gets you in, a wick here that could get you in, or a wick here that could get you into that trade with a sell limit order, and you have a nice move to the downside. Okay. And so that's a trade you may still be in. You may have targeted this low down here. But if you're not still in this trade, then again, if price continues down, makes a new low, right, this week, then we will now have, if it breaks this structure right here, then we'll have a new supply zone that we could possibly trade from, right? On the flip side of that, if it moves higher, we have an area up here, but that's kind of already been hit. So really, when you look at this more closely, you could see that this was almost an extreme zone to us because of the fact that the next area up was already hit and the next area above that was already hit as well. So if we scroll all the way back here as far as we can, I mean, this on the 4-hour chart, it takes us back to like August of 2023. That's a long way back. We're in February of 2025. So if you don't see a higher zone there, then that's where you could say, hey, that's pretty much an extreme zone. And I'll show you what I mean there also. Now, another pair we wanted to show you, the one that we lost on was NZDCHF. Okay, and our 4-hour zone was right here. The market structure was down. We had this change of character here, so the bias was down. Okay, and we had this demand zone right here. A little bit tricky to look at it, but if you turn the imbalance detector on, you can see that that is imbalance from this wick here down to this wick here. So this was a good zone to trade from. Okay, now again, it's not an extreme zone because we have another zone right above it. We have another valid zone, an impulse candle that leaves imbalance, right? Leads to a break of structure. So we have another valid zone right above it. So we definitely need to wait for a confirmation. Price comes into that zone. Looks like this candle here comes into that 4-hour supply zone, drop down to the 15-minute. We see it right here. So this is the zone. Now again, the indicator is telling us that our change of character would be down here. Okay. But, really to me, when I look at this market structure here, I see this low, I see a high here, and I see a pullback to here. Then I see another high here, but I don't really see a valid pullback, so I would have to go all the way up. So for me, I would look for kind of like this area here, and so that's where I kind of disagree with the indicator at times, And so for me, if I was to say in this swing low right here, we kind of get that change of character right there. And then if we look, really the last kind of consolidation is right in here, and we get this impulse candle down here that leaves this imbalance. But again, the issue is that we have more imbalance up here, right? We have more imbalance up here, and we have another supply zone up here with more imbalance, right? This supply zone up here doesn't have any imbalance. Okay, so the issue is, where do we put our stop loss if we decide to get in that trade? But as you could see here, this was a very, very good point to get in the trade But what I did was I put my stop loss in the wrong place. I put my invalidation zone right above these wicks here. Okay. And what happened was these wicks came right up and stopped me out of the trade of a loss. Now you could see here, like I showed you in the last one, you have all this imbalance here. So at the very least, the invalidation zone should have went right here, right at this wick here. And had that happened, then I would have stayed in that trade and look at the move that that made down. Okay. It makes a giant move down before it decides to come back up. Okay. So that was a trade that really I should have won. But because I got greedy with my stop loss and I didn't see that imbalance, I didn't account for all this about imbalance up here, right? And I put my invalidation zone up here, right? Instead of right here, I don't get taken out of that trade. So this was about where I entered the trade as price came back up into this lower time frame refined zone right here, right? Basically, that candle right there is the refined zone, right? So I got in as price came back into there. I just put my invalidation, my stop loss in the wrong place. And I put it where I should have put it up here above these wicks, actually up above this one probably. Again, then that affects the risk to reward on it. But look at the move it makes. I mean, if you measure from here, this zone from here to here, and then you look at the move it makes, that's at least, 3 times the risk, right? So that's NZD Chef. Okay, now I wanted to show you a couple pairs this week. I don't know if it was this week or last week when it actually happened. Let's see here. But on the 4-hour time, we talked about the extreme zones a little bit here, right? And so right here we see in GBP AUD, right? The structure was down, right? The bias, this last change of character here. To me, this wasn't really a change of character. The change of character would have been down here. See, because this, here's the market structure on this. This is why the indicator doesn't always give you the correct areas here, but it's pretty good. That's really not a pullback to me. So that comes up to here, there, there. Here's your swing low right here. There's your swing high. Now, when price pulls back to there, it doesn't make a higher high. Okay. So if it doesn't make a higher high, this is not where the change of character occurs. This is. Okay. So that's why I like to tell you that the change of character occurs right there. But either way, you get the change of character. So now we identified, let's see, we had a supply zone right here. Okay. It had some imbalance here. We decided not to look at this one though, because we had all this imbalance right here, and we had this 4-hour extreme zone right here. And the reason why we're calling it extreme zone is this. Okay. And by the way, the extreme zone actually extends. Trying to see something here. This moves down. This area right here, there's no more imbalance. You could see that the imbalance was right here, but all that imbalance was filled, and this area was mitigated. It was hit, right? So it was mitigated. It was already hit with this wick. And so that's why that's no longer valid. So this becomes an extreme zone because when you go over to the left here, there's no other higher zone. So that's why that's an extreme zone. Now, that's why you can actually set, again, based on how big the zone is. And again, I think, when I drew this, I made a little bit of a mistake here because really, I'm trying to see here. The zone may actually be, you know, is high. It may just have to go a little bit higher. So the extreme zone may have just been a little bit higher. But the reason why I liked this area here was because of this indecision candle. I like to see these types of candles right before the impulsive candle that eventually leads to the break of structure and the imbalance, right? And see, this is the indecision candle right here. When you see a small body and wicks to both the top and the bottom, that's the kind of indecision candle I'm looking for. This really isn't the kind of indecision candle I'm looking for. This more is. So that's why I kind of liked this zone here a lot better. Um, Price comes up, hits that zone, and look at the move down it makes. So again, when you're trading from these extreme zones, sometimes you can just put the sell limit right there on the 4 hour time frame, and you can just get in the trade. Now, I think another one that did that, I think that was the only one I wanted to show you there. Another trade was in GBP NZD, right? So again, this is what the market structure looked like. Obviously it was up, and we got this change of character here. Again, to me, guys, the change of character comes in all the way down here. But either way, you get a move now to the downside. And this is where you just get based off of the swing points that you have set in the indicator. Just to show you this real fast here. I have this indicator set to only show me in swing structure, not internal structure. And I have 25 swing points. So that's why it's showing this as a change of character. Okay, because it's going by the low in the last 25 bars. Okay, but really, since this doesn't make a new high, your change of character is all the way down here. Okay, but in either case, you get a change of character. Now, you have to look for your supply and demand zone. There's really not any impulsive candles here. So this is where you go. You get this impulsive move right here that leaves this in balance. Okay. And you have this zone right here, but then you have another zone right above it. So it's not an extreme zone, it's a decisional area. So you can't place a limit order there. You have to wait for the confirmation on a lower time frame. Right? So again, price goes through that 4 hour area anyway. So if you did put your limit order in, you would have got stopped out of the loss. But these wick rejections are really good signs here. They're really good signs, you know. And we would expect it to do that. Why? Because there's imbalance right here. See all this imbalance? There's all that imbalance that needs to be filled. Now, it doesn't all get filled, okay? And it moves away, but it does go up there to fill some of it. Now, here's our candle that moves us into the 15-minute zone, into the zone, I should say, not 15-minute. It's a 4 hour zone, right? No, I can't find it. Okay, there's the candle right there. Drop down to the 15-minute. Let's see where it's at. Okay, here's our line right here. So here's a situation where the indicator gives us a change of character, again, which isn't really a change of character, but this is where it gets interesting. So let me show you what I mean here. So right here, price moves into the zone. Okay. So when it does that, if you're reading this market structure to the upside, what do you see? You see a low here. This really isn't enough of a pullback. You see this move up, this move down to here, the move up to here, the move down to here. But what happens here, it doesn't make a new high. So in order to make a new high, when you're reading structure, you need a body of a candle to close above a wick. Okay. So you just don't go by the wicks. So even though this wick goes higher, the indicator says, hey, that's a higher high. We're looking for that body to close above there. Okay. But because it rejects like that, and we want it to reject from this zone, right? And sorry about that. Because it does that, that's actually a good thing. So when I look at this, I say, okay, I'm going to say that that change of character is valid. And so where do I want to find a zone to trade from? Right? Well, what do I have here? I have this area right here, small indecision candle. I have some impulse down, break structure, leaves all this imbalance here. Okay. I also, if I look further up here, I don't have any imbalance here, right? So this is actually my area. Okay. But again, where are you going to put the stop loss? So this is one where if you put the stop loss too tight, you kind of get taken out of the trade. Now, when I look at this, I would look at this candle right here. And I would probably use this wick right here for my stop loss. Now, this wasn't a trade. I didn't take this trade, but I'm just showing you this after the fact so you could see how it's important to, you sometimes you have to look at the candles to the left to see, hey, what's going on here? Now, there's really no imbalance up above here. There was never no imbalance up above here. This was all perfect price action. And then the imperfect price action is where you have the imbalance, right? Um, so if you put your stop loss, if you just use these equal highs right here, why wouldn't you want to use these equal highs? Okay, this is kind of interesting to see. And that's why I leave this on the indicator. You see these three equal highs right here? What do we know about those equal highs? We know that there's a lot of liquidity above them, right? There's going to be a lot of liquidity above them. Why is that? Because most people, support and resistance trader, will see that as a place, right, that they would want to put in their sell order. Okay. And if they put their sell orders in there, they're going to put their stop losses right above there. Now, if they were smart, they would put their stop loss up here. Okay. But that's why this wick kind of comes up and grabs this liquidity up here because you have these equal highs. So to me, if it was me, I would use this area right here for my invalidation zone. And of course, price never hits that, and it makes this huge move down. Okay. But hey, if you use this area here, again, I can't say you'd be wrong, except for the fact that you have all those equal highs there. And that's where I would stay away from that area. Price comes up, takes you out of the trade before it makes its move down. Right. So what can we do here now? This week coming up with GBP NZD. I think this is the last one I'm going to show you. Look. So when we look at the 4-hour chart here on GBP NZD, if you're in that trade there, right, you would look for a break of structure down to here, right? You get a break of structure down to this area, past this area here, then you can identify a new supply zone to trade from, right? Or price may move up into that next zone before doing that. And you could trade down from there, depending on what that looks like. Another pair that you may want to look at this week is AUD NZD. Here on the 4-hour time frame, the reason why I wanted to show you this is because price on Friday moved into this 4-hour demand zone here, and look at the wick rejection we got on the 4-hour time frame. Again, this is why you wouldn't want to put a buy limit order on this 4-hour demand zone because you would have got stopped out of the loss. And you wouldn't do that because you have all this imbalance down here, right? And you also have another supply zone down here. Now, the issue though with this supply zone is that it's already been hit, right? And there's no imbalance. Okay. The imbalance was here as it pulled away, but then this candle came down and this wick filled that imbalance and also mitigated this zone. Okay. So because of this, this is a very good zone to trade from. Okay. There's no imbalance here, right? We got a wick rejection on this 4-hour candle. Okay. So that's why it's important to look at the zones below, even though they may not be valid. This really is nowhere near an extreme zone, right? There's another area down here. So you wouldn't want to trade from that until you drop down to the 15-minute. So now on the 15-minute, if we look at this price structure here, okay, we got price coming down. So again, to me, when I look at this price structure coming down here, what do I have? This, this, down to here, right? Down to here. Now here, there's no pullback here. So to me, this comes all the way down. Okay, so if I'm looking for a change of character here, I'm looking for price to come all the way up here and break this eye. Okay, so that's what we need this week. We need price to come up to here and then give us a valid supply zone to trade, demand zone to trade from before moving higher, right? This is AUD NZD. Now, the other thing that can happen is price can make a new low, right? So if price comes down like this and then makes a new low, okay, now we have a new swing high. Now we have a new swing high right here, right? And so now, if price breaks that, you have the change of character to your upside. You can identify a valid, refined demand zone down here before price moves higher. So that's what you can look for in AUD NZD, guys. So this has been the weekly market recap using the supply and demand zone trading, right, strategy. The higher time frame strategy, looking for the trend and identifying the zones on the 4-hour and then dropping down to the 15-minute. Again, unless you're in a confirmed extreme zone that you could trade directly from, we drop down the 15-minute, look for our confirmations there. Any questions? Drop them down below this video. If you like this video, subscribe to the channel, like it, comment, good comments, bad comments, whatever. Any questions, drop them down below there and I will answer them. Bill Soriano from Pittsburgh. Have a great day.